Over the past week, you've probably seen a number of videos or headlines about a supposed market crash that we've seen here in the US markets. A lot of big names have seen some substantial pullbacks just in the last few days. Apple, Tesla, to name a couple. There are many others that have seen similar pullbacks. But I want to put this in context because what we're seeing could hardly be called a market crash, at least yet. I'm not going to write anything off for the future, but let's take a look at what has actually happened. But before I get into that, just want to introduce myself. If you're new to the channel, my name is Jack Duffley. I'm a 23-year-old real estate investor and soon-to-be attorney, and on this channel I cover a variety of topics as they relate to real estate, investing, and pretty much everything as it has to do with personal finance. So if you like that sort of content, be sure to have a look around the channel, and if you like what you see, be sure to subscribe. Now, before we can talk about this alleged crash, we have to set the scene a little bit and rewind back to March of last year in 2020, that dreaded month in the stock market. While short-lived, that definitely was a crash of some sort. Across the board, the markets dropped something like 30% at their lows. Huge drop very quickly. That could certainly be called a crash. A lot of this was on the heels of the pandemic. We had lockdowns coming in, lots of economic uncertainty, and people were liquidating their positions very quickly. But then the Fed started printing like mad. The government started spending like mad so that the Fed could print even more, and we saw a lot of currency devaluation, which is still kind of making its way through the markets and out of the markets really into commodities and other goods. But that's beside the point. The point is the market did recover very quickly to where now it's actually well above those March lows that we saw just about a year ago. Now I'll get back to that in just a second, but let's take a look at what today's alleged crash is, or at least this last week's was. Now the S&P 500, which represents about the 500 largest companies in the US market, is down about 2% on the month. Actually a little bit less than 2%. Okay, so somewhat of a pullback there, I guess, but we've seen larger pullbacks in a single day just throughout this last year, so I don't really think that's something to call a crash. But what about elsewhere in the market? If we head on over to the Nasdaq, which is mostly large tech firms represented by QQQ, the ETF, we could take a look that it is only down about 7.5%, much more significant for sure than the S&P 500's measly 1.8% or so. That's certainly getting much closer to substantial correction or market crash territory, but that's just within one sector. But let's zoom out a little bit on this chart. If we go back to those March lows, we can see that the Nasdaq is still way up since March of 2020. In fact, about 80% above those March lows. And that's after you factor in the recent crash. That includes that 7% drop we just saw in the last month. So still up huge. And while not quite as lucrative since the March lows, the S&P 500 is up about 70% since March 20th of 2020. So I think it's pretty safe to say that we're not in a market crash, at least at the moment. I'm not going to write anything off for the future since things are very, very expensive in the market right now, especially in tech, which saw coincidentally the largest pullback in the recent week. But I think it's very important to put these moves in context. If you're just looking at a 1 week or 1 month view, you're not really going to get the whole picture. You're just looking at short-term price movements, and those are largely random. You'll never really know where the market's going to go. Things could happen for seemingly no reason in a given day or a given week or even a given month or even a given quarter. There are lots of weird things that happen in the stock market in the short term. Even across a full year, which might seem like an eternity, especially for someone who's brand new to investing, you can really see some rather strange things happen across that entire period. So trying to guess where the market's going to go in the very short term really isn't worth much. As a wise man once said,
number one rule of Wall Street: nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles, least of all stockbrokers.
But what does this all mean? Well, it could be that investors are trying to move their money towards different opportunities outside of tech. Like I said, tech is extremely expensive right now, generally speaking. You're not going to find a lot of quote-unquote good deals, Warren Buffett-style value investing. You're not going to find that in tech right now. It's just so expensive across the board. Huge multiples on earnings, projecting gigantic growth in revenue and hopefully profits, and even unprofitable companies that have been unprofitable for many years having these enormous valuations. This isn't to say that at least some of those companies won't come out on top and will actually justify their current share price, but the more you pay for a stock, the riskier that proposition becomes if you're trying to get something at a good deal. But if you're either investing for the long term via index style investing or via value investing where you have a price target in mind, a short-term fluctuation like this should not suddenly change your strategy. strategy. You should know that this is going to happen at some point in the stock market in a certain sector. This pullback isn't really applying to the whole market, at least yet. We'll see what happens. It's very sort of secluded to tech at the moment. We're seeing some movements into other types of stocks right now. But again, that's all short term. If you have a price target in mind on a stock, then a short-term movement would imply that you should buy more of it if it falls under your target. Or if you're an index investor, you probably don't really care about a short-term movement at all because you are just investing for the very long term. You're betting on growth in a very diversified portfolio. Sure, you're not going to get those market-beating returns since you're investing into the actual market, period, so you're not going to get anything better than it. But if over the long term the market keeps going up, then you should be good, and you shouldn't really care about this short-term fluctuation because you're investing on a 20-year, 30-year time horizon. Even zooming out 1 year like we just did, you can see that this dip is insignificant compared to the incredible gains that the market has seen over the last year. Now, I'm not saying that you should completely ignore significant pullbacks, but do put things in context and do understand what your strategy is going into investing before this sort of thing happens, because it will happen inevitably. We very well could see this as a trigger towards a larger market pullback because things, like I've said, have gotten very expensive. And things often become expensive as people pour more money into it rather recklessly, or they don't really know what they're investing in. We're seeing that a lot with brand new retail investors who maybe have never even experienced that March crash. They haven't seen any market crash ever. So this slight pullback at the top of a very expensive market is terrifying. When you invest with absolutely no strategy other than relying on the fact that you need something to go up in the short term, you're in for a rude awakening when even a slight pullback occurs. Whatever your investing strategy is, I'm not suggesting one either way. I'm not a financial advisor, but make sure you have one at least and that you stick to it as long as it's a decent strategy, of course, one that has a proven track record of some sort. And if your strategy is speculating in the short term anyways, I can't really help you there because after all,
nobody.
So are we really in a market crash? I would definitively say no, but we could be if things continue in this direction and start to compound and start affecting the broader market, not just tech stocks. And this is definitely something to keep an eye on since the markets have been rather crazy over the last year because there's just so much exuberance right now despite the very poor economic outlook. You have companies trading way over what they maybe fundamentally should be trading for, but there's not a lot of alternatives to invest in when bond yields are as low as they are. We've seen a slight tick up recently. That could be something that's contributing towards this slight pullback. We'll see what happens there. But either way, if you like this video, definitely like it since that would help the channel out a lot. And if you like this sort of content about the markets and investing and pretty much everything as it has to do with personal finance, then definitely subscribe since I put out new videos every single week and wouldn't want you to miss out. And check out my affiliate links in the description below. There's some free goodies down there, so you might as well get them while they're there since there's no guarantee that they will be there long term. But until next time, take care.